This video is going to discuss automated invoicing and collection strategies that will allow you to set it up one time and then the process runs without additional action required by you. These strategies will work best for someone who's got fixed amount invoices that need to be collected on a repetitive basis, such as monthly, and we're going to use it for QuickBooks today. To create an efficient invoicing and collection system, the first thing we're going to discuss is going to be automating the collections part of it. We're going to discuss two different options for automating your collections. Let's start by discussing QuickBooks Payments. QuickBooks Payments allows your customers to pay via credit card or ACH debit. If you don't have a QuickBooks Payment account, you will need to get this account set up first. There are fees associated with QuickBooks Payments. The credit card processing fees will be at their normal credit card rate, which will vary between 2.5 and 3.5% of the amount processed depending upon which plan that you are on. They will also do ACH debits for you, and their fees for those are 1% of the invoice amount processed, and the payment should be received the next day. The first thing that you're going to need to do is to configure your QuickBooks Payment account. You'll want to navigate to your payment settings. Start by selecting the gear in the upper right hand corner, then Company Settings, and then select Payments. You'll want to specify which bank account the deposit should be recorded in, and you'll want to specify where your merchant fees should also be recorded at. Next, you'll want to configure your client's payment and billing settings. Go to your customer information screen and select the Payment and Billing tab. Select the preferred method as QuickBooks Payment Bank for ACH drafts and QuickBooks Payment Credit Card for credit card transactions. Save your changes. At this point, you're set up for QuickBooks Payments. You're ready to move on and set up your invoicing. The second option that you have is to look at your third-party ACH processors. QuickBooks has all the technology built into their software, but you're not limited to only using QuickBooks to do this. You may want to reach out to third-party vendors. You can start with looking at your own bank. Here is a typical range of ACH processing fees from third-party vendors. The fees for most third-party processors will be significantly lower than using QuickBooks Payments. So here's a price comparison. This example demonstrates the cost comparison for a monthly recurring fee of $500 per month, and it also compares what it would look like if you had 50 of those transactions. So under QuickBooks Payments, using a rate of 2.9%, each transaction would cost you $14.50. And if you had 50 of them that you were running each month, your credit card processing fee would be $725 a month. It's a little bit better if you're using the ACH draft option. The rate for ACH is just 1%. So for every one of these that you run through, your charge would be $5 a month, $5 per transaction. And if you had 50 of them, it would be $250 a month. But if you're using a third-party processor for your ACH transactions, it's 25 cents per transaction plus a flat 25 monthly fee. So if you were running 50 of them a month, your fee would be about $37.50. That's a significant change in price. We use a company called EFX ACH to manage our ACH transactions, but there are a lot of other options out there as well. The thing I really like about EFX is that they allow us to set up this ACH draft once, and then it just processes every single month on the date that we specify. And here is the setup screen within their system. So now that we've gone over your collection strategies, we're going to talk a little bit about setting up your invoicing so that it will happen automatically. And so the first thing you're going to want to do is go into QuickBooks Online and set up a recurring transaction. To create a recurring transaction from scratch, you're going to go to the gearbox in the upper right-hand screen and select Recurring Transaction option. You can also create a recurring transaction from any existing transaction by selecting the Recurring option at the bottom of each transaction. In the upper right-hand corner, you're going to look for the green New button there. And it's going to give you an option to select the transaction type. You will want to select either invoice or sales receipt. If you're going to use QuickBooks Payments to collect your fees, you'll want to make sure that you set them up as a sales receipt. We typically set them up as an invoice for EFX processing, mostly that I want to make sure that those transactions are being applied against an invoice. Either one will work. So once you've selected your transaction type, you're going to start to set up your template. So the first thing you're going to do is create your template name. This needs to be something that is meaningful for you. We typically use our customers' names. Next, we're going to select the type that you're going to want this transaction to be, and we always choose scheduled. A scheduled transaction will process automatically without any more action on your part. Select your customer. If you want them to receive a copy of your invoice or your sales receipt, make sure that the email is populating here, and you'll want to make sure that you mark this box to automatically send emails. If you're going to be allowing using QuickBooks Payments, then you'll want to edit this and make sure that the payment options are turned on. You don't have to turn both of them on. If you want to use only bank transfers, you can limit it to only be bank transfers. Next, you're going to want to turn on your interval. Your interval options here are going to be daily, weekly, monthly, or yearly. We usually set it up so that they come in on the first day of every month, and we select our start date. So what's the first date going to be when you produce this invoice? Your billing address should automatically populate with the customer's name, and then we would typically have our terms to be due on receipt. From there, you'll finish out your template. You'll select your products and services and the fees that you're going to charge to your client. And that's really all there is. Now you will have both an invoicing and a collection strategy in place. The following things should occur. Your invoices should automatically generate each month, and your customers should receive a copy of your invoice if you set it up that way. Payment will automatically be collected by either QuickBooks Payments or a third-party ACH processing vendor. In QuickBooks, the payment should automatically match against your invoice or your sales receipts. And there you go. That's it. There's all there is to it. If you have any questions about these strategies, please feel free to reach out to us.